be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press star followed by 2. Thank you. And with that, you may begin your conference.
Thank you and good morning. Welcome to SOFI's second quarter 2025 earnings conference call. Joining me today to talk about our results and recent events are Anthony Noto, CEO, and Chris Lapointe, CFO. You can find the presentation accompanying our earnings release in the Investor Relations section of our website. Unless otherwise stated, we'll be referring to the adjusted results for the second quarter of 2025 versus the second quarter of 2024. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks and uncertainties. These statements include, but are not limited to, our competitive advantage and strategy, macroeconomic conditions and outlook, future products and services, and future business. Macroeconomic conditions and outlook, future products and services, and future business and financial performance. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and the subsequent 10-Q filing, which will be made available next month. Our actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are described in today's press release and our subsequent filings made with the SEC, including our upcoming Form 10-Q. Any forward-looking statements that we make on this call are based on assumptions as of today. We undertake no obligation to update these statements as a result of new information or future events. And now I'd like to turn the call over to Anthony.
Thank you and good morning, everyone. We had an excellent second quarter as we continue to drive durable growth and strong returns through our relentless focus on product innovation and brand building. Our one-stop shop strategy is stronger than ever, further accelerating our year-over-year growth in adjusted net revenue to 44%, the highest growth rate in over 2 years, and driving a 5.6 times year-over-year increase in earnings. I'll begin by covering our key results for the quarter, starting with our durable growth, which continues to be driven by the growth of members and products. We added a record 850,000 new members in Q2, increasing total members by 34% year-over-year to 11.7 million SOFI members. We also added a record 1.3 million new products, representing 34% year-over-year growth to over 17 million products. Cross-buy remained strong in the second quarter, with 35% of new products opened by existing SOFI members. We have proven once again that our strategy is successful in driving new members to SOFI and getting existing members to do more with us. Our strong member and product growth powered our revenue growth in the second quarter. Adjusted net revenue was a record of $858 million, up 44% year-over-year. Together, our financial services and technology platform segments generated $472 million of revenue, up 74% year-over-year, and now representing 55% of total revenue. In our lending segment, adjusted net revenue grew 32% year-over-year to $447 million, driven by strong originations in the segment of $6.3 billion, up 18% from the prior year. Combined with the very strong $2.4 billion of originations in the loan platform business, total originations reached a record of $8.8 billion for the second quarter. This is an increase of $1.5 billion from just last quarter. Total fee-based revenue across our business was also a quarterly record of $378 million, up 72% from the prior year. This was driven by strong performance from our loan platform business, origination fees, referral fees, interchange revenue, and brokerage fee revenue. On an annualized basis, we are now generating over $1.5 billion of fee-based revenue, reflecting the deliberate diversification of our business towards more capital-light revenue streams. In addition to delivering durable growth, we delivered strong returns and profitability. In the second quarter, all 3 segments delivered record contribution profit at attractive margins. Adjusted EBITDA for the quarter was a record of $249 million, up 81% year-over-year. Our adjusted EBITDA margin for the quarter was 29%. Our incremental EBITDA margin was 43%, as we continue to balance reinvesting in the business to drive long-term growth and profitability. Net income for the quarter was $97 million at a margin of 11%. Earnings per share were $0.08. Finally, our tangible book value ended the quarter at $5.3 billion, a year-over-year increase of over $1 billion, and a quarter-over-quarter increase of nearly $200 million. This strong financial performance is driven by our consistent, disciplined investment across our diverse portfolio of businesses focused on building a trusted brand name, continuously enhancing existing products, and developing new products to help our members get their money right. As the only one-stop shop for digital financial services, our investments can drive greater long-term growth because we have more ways to attract members to our platform and more ways to grow with them once they're here. Let me give an example of how this works. A member may come to us through SOFI Relay, a free product that analyzes a member's finances and provides tangible options for how they can spend less than they earn so they can invest the rest. For perspective, it costs less than $15 to acquire a SOFI Relay member. Based on the ease of use and the quality of the insights, this member decides to move their checking and savings accounts from a big bank to our SOFI Money product. To get our best APY, the member enrolls in direct deposit, instantly making them a SOFI Plus member with access to our best benefits, including unlimited access to financial planners, loan discounts, more rewards, and unique experiences. This member instantly goes from earning just 2 basis points of interest at the big bank to earning 3.8% at SOFI. So on $10,000 of saving deposits, they earn about $380 in annual interest compared to just $2 at the big bank. With this extra cash in hand, the member opens a SOFI Invest account, taking advantage of the 1% match on recurring investment deposits, paid in reward points, another benefit of their SOFI Plus membership. Later, the same member sees a recommendation in their home feed to consolidate credit card debt where they are paying north of 20% interest into a SOFI personal loan at a rate in the low teens, resulting in more savings. The member puts the money they save on a lower cost loan in a SOFI vault to save for a down payment on a home and take advantage of our home lending product. Every day, stories like this unfold as members turn to SOFI products for every major decision in their financial lives and every day in between. Along the way, we're creating lifelong relationships that deliver real financial value to our members and to our business. Because these relationships often stem from just one initial product with one acquisition cost, we generate significantly more favorable unit economics. In the example above, we would generate a variable profit of about $1,800 on the personal loan before even considering the opportunity to grow the relationship with the home loan or other products. As we do more with each member, we drive a higher lifetime value, which is our sustainable competitive advantage and allows us to continuously reinvest in our business to provide better products, lower interest rates on loans, higher rates on savings accounts, boosts on recurring investments, and even more free financial services, and in turn, driving the power of our virtuous cycle. The concrete result of this virtuous cycle is superior compounded growth over the last 5 years, including nearly 50% revenue growth, member growth of 58%, and product growth of 60%. Despite the significant growth we have achieved to date, we are just getting started. The existing opportunity in front of us is massive, and the opportunity is growing through our own innovations to expand our addressable markets and by rapidly advancing technology. In fact, we are at an unprecedented point in time with 2 technology supercycles taking place. Crypto and blockchain, as well as AI, have the power to completely reinvent the future of financial services. As a tech-forward digital one-stop shop, we are uniquely positioned to capture the opportunities presented. Let me take a moment to discuss some of our recent investments in these areas, as well as our ongoing investments in brand building and product innovation across our platform. Starting with crypto and blockchain, I am very excited that during the second quarter, we announced the first 2 of many planned crypto and blockchain innovations across our products and services. First is self-serve international money transfers, which will allow SOFI Money members to seamlessly and securely transfer money to people in dozens of countries, whether it's to support family abroad or make purchases outside the U.S. or manage their money across borders. These transfers will be fully automated in the SOFI app, at significantly faster speeds and lower costs compared to traditional services, putting more money in people's pockets faster. And these transfers can also be done by businesses. Here's how it works. A member deposits funds in their SoFi Money account. Through the SoFi app, they initiate a transfer by entering the recipient and the amount to send in US dollars. Funds are automatically transmitted on a secure, well-known blockchain network and converted into local currency at the destination, then rapidly deposited into the recipient's account in the fiat currency of choice. This process is fast and easy. It can take under a minute, and it will be done with full transparency with exchange rates and fees up front, and it will be available 24/7 in the SoFi app. And you can imagine the day when the SoFi app is deployed internationally for payments coming from non-US countries to the US. The ability to leverage blockchain technology to send money internationally is yet another enhancement of SoFi's unprecedented money movement offering. The second crypto-related innovation is our return to crypto investing. We are excited to once again be able to provide members with the ability to buy, sell, and hold a selection of cryptocurrencies like Bitcoin and Ethereum. In a recent survey of our members who invest in crypto, we found that 60% would prefer to work with a nationally licensed bank like SoFi over their current primary crypto exchange. This is another benefit of having a bank license, and yet another way we are providing our members options to invest for their future. We now offer members the ability to buy and sell single stocks without commissions or fees, our award-winning robo-advisory products, SoFi-branded ETFs, IPOs at IPO prices, alternative investments including new private market funds from asset management firms including Cashmere, Fundrise, and Liberty Street Advisors, which we added this month, and soon crypto. Both self-serve international money transfers and crypto investing are expected to launch later this year with more innovations to come. Crypto is a key area of focus for our management team, and when we have brought on board significant expertise, including substantial engineering talent, to advance these new initiatives. The cost, speed, and security of paying, buying, and spending are worse today than they will ever be in the future. Faster, safer, and cheaper options will only get better and better every year. Over time, we see opportunities across our entire platform, including offering stablecoins, providing members the ability to borrow against their crypto assets, expanding payment options, and introducing new staking features, as well as blockchain and digital asset infrastructure capabilities for other companies offered by our technology platform. Blockchain and crypto have the potential to be a game changer for SoFi and our members. Turning now to AI. We're implementing and testing AI applications across our business, from enhancing back office processes like dispute resolution and filing suspicious activity reports to improving how we interact with our members to help them get their money right, and we've brought on teams of engineers to drive these efforts forward. One specific member-facing application that I am particularly excited about is Cash Coach. Cash Coach will be a part of our Relay product and will look across your cash held at SoFi and elsewhere and tell you how much you actually have, how little you might be earning at other institutions, and how you can optimize your cash to drive a better return. Cash Coach is just the beginning. In the future, we plan to roll out coaches across our platform to help members understand what they must do, what they should do, and what they can do across their financial lives every day. Let me now shift to our brand building efforts, which are key to establishing SoFi as a trusted household name. These investments increase the overall awareness of SoFi and have a halo effect that makes our performance marketing of each product more efficient. During the second quarter, we unveiled our first ever music partnership as the presenting partner of the Country Music Association's CMA Fest, the world's largest and longest running country music festival. Beyond the exposure of having our name appear everywhere the CMA Fest brand goes at the festival and on broadcast, we also offered exclusive perks to SoFi Plus members, enriching the value of our premium membership offering. We've also partnered with award-winning artist Kelsea Ballerini across our marketing channels to inspire others about the importance of reaching financial independence. Together, our marketing efforts drove unaided brand awareness to an all-time high this quarter, reaching 8.5%, up from 7% last quarter. Turning now to product innovation within our segments, starting with the financial services segment and the loan platform business, which is having a profound impact on our business overall. As a reminder, LPB leverages our customer acquisition, operations, and service capabilities to originate customized loan portfolios on behalf of third parties. We typically move these loans through our balance sheet in a matter of days, so they don't require additional capital, and we do not retain any credit risk after transfer. With LPB, we collect a fee for each loan transferred, supporting our strong growth in fee-based revenue. Prior to the second quarter, the vast majority of our LPB volume consisted of loans within our prime credit box, but over and above the volume we want to put on our balance sheet. However, during the second quarter, we meaningfully increased the proportion of loans that are near prime with higher WAC, effectively monetizing more of the roughly $100 billion of loan applications that we are not able to meet each year. This expansion, along with the large agreements that were previously announced, helped drive record LPB origination volume of $2.4 billion, an increase of 57% from just last quarter. On an annualized basis, after just 1 year, this business is running at a pace of over $9.5 billion of originations and over $500 million of high-margin, high-return, fee-based revenue. It is now bigger than our student loan refinancing business, our first business, and we see further upside still. We remain incredibly optimistic about the loan platform business, which continues to move closer to becoming a billion-dollar revenue business. As we look further down the road, we see the potential to tokenize SOFI loans to make them more widely available in liquid markets in increments of dollars rather than tens of thousands of dollars, such that anyone can invest in loans just like they do equities. Turning to our tech platform segment. This business has been instrumental in our ability to innovate across the SOFI platform. It allows us to more rapidly develop, test, and roll out new products while also providing significant cost savings versus relying solely on third parties. For example, SOFI uses the tech platform's Cyberbank Connector, an AI-powered virtual personal banking assistant, to provide seamless support to members across digital channels and reduce operational costs. This adoption has led to a 65% faster average response times and cut our chat abandonment in half. Tech platform innovation is not only helping SOFI, but our clients overall. Banco Nación, one of Argentina's largest financial institutions, selected our Cyberbank digital platform to modernize their digital banking infrastructure. The implementation, which started with corporate banking, has already resulted in a 25% increase in organic client growth and reduced implementation time from months to just 4 business days. They've now positioned themselves to unify mobile and desktop banking systems for over 10 million consumer banking customers as well. We also continue to make strong progress diversifying our client base beyond traditional financial service firms and fintechs. Earlier this year, Tech Platform launched a first-of-its-kind reward debit program with Wyndham Hotel and Resorts, and we've signed 2 additional travel and hospitality companies that are expected to launch before the end of this year. In total, we anticipate having approximately 10 new clients that contribute revenue in Q1 2026 that did not contribute revenue in Q1 2025. Now turning to our lending segment, where we had another fantastic quarter of originations. Despite this being our longest-standing business, we see significant growth opportunities across our loan types and are enhancing our product offering to capture them. For example, we are already leaders in the personal loan market with roughly 15% of the prime segment. However, we know that the top use of a personal loan is to refinance expensive credit card debt, which makes the real addressable market much larger. Americans in the prime credit category have over $700 billion of outstanding credit card debt, which means that the true opportunity is a large multiple of the volume that we are currently originating. This is one reason why, in the second quarter, we launched a new personal loan product for prime credit card customers that carry a revolving balance and are making mostly interest-only payments. While it's very early days, we are pleased with the interest in this product and to be generating awareness among members that SOFI can help them get their money right instead of being gouged by our competitors. In student loan lending, we had another strong quarter with nearly $1 billion of originations, up 35% from a year ago. Given the evolving student lending landscape, in the second quarter, we launched a refinancing solution which allows for lower payments in the early part of the loan and steps up into paying regular payments after this introductory period. This allows members to find their footing and build long-term savings, and it's another innovative way we are targeting the estimated $280 billion of student loans that can currently be refinanced at a more attractive rate. With the elimination of the government's Grad Plus program and the capping of the Parent Plus program, we see further opportunities for in-school lending and student loan refinance. Turning to home lending, total home loan originations reached nearly $800 million in the second quarter. This is an increase of more than 90% year over year, despite the elevated rate environment. One key driver of this growth has been our home equity loan offering, a particularly attractive product in this high rate environment. In the second quarter, we had our best quarter of home equity originations, surpassing last quarter's record. This product, which we didn't have a year ago, accounted for nearly 1/3 of our home lending volume. As interest rates come down, we are planning for an acceleration in demand for both home purchase and refinance. To put the opportunity in perspective, we have nearly 3 million members with a home loan held at another institution, and we believe we are well positioned to capture a significant portion of the refinance volume as the rate environment improves. Our success in the second quarter is clear validation of our strategy and execution. And as you can see, we are just scratching the surface of the tremendous opportunities for growth that exist across each of our products and segments. Furthermore, the opportunities are growing, driven by both our ability to expand our addressable markets through our innovation and the rapidly advancing technology, including blockchain and AI. As the only digitally native one-stop shop for financial services, we are uniquely positioned to capture the increasing opportunities on our way to becoming a top 10 financial institution. I assure you that our team is working tirelessly to add even more value to members and to seize the opportunity in front of us. With that, let me turn the call over to Chris.
Thank you, Anthony. It has been a strong start to the year as we continue to drive durable growth and strong returns. We exceeded each metric that we guided to on our last call on the way to delivering accelerating revenue growth in our 7th consecutive profitable quarter. For the quarter, revenue accelerated and grew 44% year over year to a record $858 million. Adjusted EBITDA was also a record at $249 million and a margin of 29%. Net income was $97 million at a margin of 11%. And earnings per share was 8 cents. This included a small benefit of about a penny related to a lower than expected effective tax rate. An important driver of the acceleration of growth was the increased contribution from capital-light non-lending as well as fee-based revenue sources. Our non-lending businesses generated $472 million of revenue, up 74% year over year, and we also generated record fee-based revenue across all businesses of $378 million, up 72% year over year. Turning now to our segment performance. In terms of financial services, for the second quarter, net revenue was $363 million, more than double that of Q2 2024. Contribution profit was $188 million, up nearly 3.4x from last year. And contribution margin was 52%, up from 31% last year. Net interest income for this segment was $193 million, up 39% year over year, which was primarily driven by growth in member deposits. Non-interest income grew nearly 4.6x to $169 million in the quarter, which equates to over $650 million in high-quality fee-based income on an annualized basis. Importantly, improved monetization continues its strong contribution to revenue growth. Financial services revenue per product increased from $64 in the second quarter of 2024 to $98 in the second quarter of 2025. That's up over 50%, and we see continued upside as newer products mature. In Q2, our loan platform business generated $131 million